In the metals quadrant, taking a look at the June gold futures contract, which rallied today on respectable volume, but did not surpass yesterday's low or yesterday's high or yesterday's volume. The high today was 33.77, which was up 2.52%, and the low was 33.0130, which was actually a gap higher of 0.22%, so a straight up day. But this is called an inside range day and can often mean a reversal. But given that the last 2 days of selling was coming off of another all-time high, that reversal may not pan out. On a weekly basis with one trading day left, gold is actually still up, but only by 0.6% after having been up by 5.45% when it was trading at its highs. In aggregate, the dollar pushed lower today following a stretch of 3 sessions higher in the last 4. Over the last 30 days, the inverse correlation between gold and the US dollar has been at around -84, and the dollar was weaker against all the majors today, with the worst performance being against the big three, the yen, the pound, and the euro. So that was clearly a tailwind for gold. The inverse correlation over the last 30 days between gold and US Treasury yields has been even stronger, up in this -88 range. And Treasury yields were lower by the most in a week today. Specifically, the 10-year note dropped by 9 basis points to hit 4.31%. In addition, we saw the CME Fed Watch tool shift back to pricing in 6 rate cuts through 2026. And Cleveland Fed President Beth Hammack, speaking on CNBC today, said the Fed could move rates lower in June if we have clear and convincing data by then. That part's a quote. This is another tailwind for gold, but the inside range day is not a convincing signal that the rally is ready to take off again in the gold futures contract.